yet another edition. Week is something that's pertinent, that's making headlines every single day. Layoffs, funding crunch, shutdowns. Is the great Indian startup party coming to an end, or is it already over? To discuss all this and more, we have an ace panel with us: Sanjeev Bikhchandani, the founder and CEO of InfoEdge. We have Ashwini Asokan, the co-founder and CEO of MadStreetDen. We have Ganesh, who is the promoter of BigBasket, Portea, many other startups. We also have Anand Lunia of India Quotient. We will also be joined by BT Bharadwaj of A91 Partners. So we have a good mix of founders, investors, and founders who are also investors. So that's an interesting mix to have on the panel. Thank you all very much for joining us. I want to start by asking you, it's been such a sea change compared to even February, March, when we were counting unicorns. I mean, we marked the 100 unicorn milestone barely in April, May, and things changed so quickly after that. Every day we are counting layoffs these days. We are counting startups who are shutting down, unicorns who are struggling to raise funding rounds. So before I get to the specifics, I just want to start with a sentiment check from all of you, and all of you are based in different parts of the country. So maybe you can tell us what the current mood is. What are the conversations like these days between founders and investors? Sanjeev, you want to go first?
So it all depends, I guess, on the position of the company. Does it have enough capital for the next 2 or 3 years? Is the burn very high? Is growth not happening? So each company is in its own situation. And obviously, companies that are where growth is flagging, where burn is high, where unit economics are not great, and they had banked on getting the next round and the next round and the next round, and then get to closer to profit maybe 3, 4, 5 years out, they are going to have to accelerate the break-even sort of deadline. And for some people, that may not be easy to do. So it's a mixed bag, and people are, I guess, waiting and watching. Those who are observing.
And Sanjeev, how hard is it for you as an investor to, advise startups that are not doing well in this environment to shut down? I think, we spoke to a couple of founders backed by InfoEdge as well. I think Uday and, one more startup today, which figured out that, its model is not working in the current environment. So they may have to shut down and return capital. How difficult are these conversations? How are you going about it?
So look, we are not advising anybody to shut down. We are advising people to cut costs. We are advising people to conserve cash. We are advising people to get to, somehow get to better unit economics. And we are advising people to raise money. And naturally, if there's money coming in, we are happy to participate and support, even when times are difficult.
Right. Ashwini, give us a sense of what's happening in Chennai. I mean, Chennai, as we discussed earlier, is relatively insulated from the hype cycle, but what are the conversations like these days in that ecosystem?
I'll start off with a bit of a cheeky note, very much on point with my style. I think on Twitter, that for some of us it's always been winter, and by some of us I mean women. And I do believe that we've not necessarily had the luxury of being operationally inefficient, because venture capital dollars have always been managed in a very different way. So I think some of us are going to do just fine. That said, from a Chennai perspective, like I said, it definitely does feel a little bit more insulated. That's not to say that everybody's not having those conversations about becoming operationally efficient. That's definitely not the case. But I do believe that especially on the SaaS side of things, which is broadly what Chennai is about for the most part, I do believe that most Chennai startups just raised, right? So I feel like the air is a little bit calmer here than I was recently in Mumbai, and I was also in Bangalore, and it definitely feels a little bit different. But I also think in the circles here, the conversations definitely are hey, is there any bloat, is there any fat, how do we actually cut, and how should we become operationally efficient? Those conversations are definitely happening, but there's not a whole lot of panic.
Right. Anand, Ganesh, I think both of you are based in Bangalore. What's the scene like these days? At least whoever I speak to are only talking about doom and gloom, etc.
Anand, go ahead.
Ganesh, I was hoping to say that. Okay, so
I said it
uh,
first.
Chandra, I think the good part is Ashwini is right. A lot of companies have raised money. Okay, and what that has meant is that companies now, some companies have a real business, and these companies will have the luxury to now say, okay, we just need to extend our runway, maybe become profitable in this current round, maybe extend the runway to maybe let's say 2 years. Hopefully the winter will be over at that point. But I think interestingly, this time there's a large proportion of companies where they have raised a lot of money, but they don't have any underlying business. And we are seeing undercurrents of companies completely pivoting from what they were doing and selling last year, or talking up last year, right? So I think it'll be good. I think a pivot, consciously done while the money is in the bank, is a smarter strategy today than to sort of say you go to slow death, then you run out of money, you have 3 months, 6 months of money left, and then you decide to do pivot or something else. It probably be better that every founder, every investor on the board of the company should think hard on, is this the business they personally want to invest the rest of their life in, and also investor, is this the business they want to continue to own, right? It's a tough call because most of them would have taken some global money recently, and then they go back and tell the global investor, hey guys, we sold you the wrong story last year, we want to pivot now. But that'll be a very smart move to do, I think.
Ganesh?
Yeah, no. So I think this entire hullabaloo is a bit overstated and overhyped up and more sensationalized than normal. I've been in the startup ecosystem for the last 32 years. We have seen
But why would
multiple,
you call it? But why would you
multiple.
call it overhyped? People are
Yeah,
losing jobs.
I'll tell you. I'll tell
Companies
you.
are not able to raise money. There are many startups who have shut down. I mean, even you have to
No,
admit
no.
that the party is
Hey
over.
Ganesh, don't change Chandra's narrative now.
No, no. Sorry. I feel very strongly differently. So, see, what suits the media, what suits people, what suits headline, what gives you clickbaits, is one man bit one dog. Okay, right? Which is great because it catches the news. Or we saw somebody doing solo gummy or marrying herself as this. Well, it's a great news. That's not normal. That's not average. That's not uh, what's happening all around. So coming back to this, the reason I'm saying overhyped is, one, we have entrepreneurs anyway every day, whether markets are good, markets are bad, they live through stress and handle uncertainties like nobody else can. If the markets are good, there is great resignation happening, people are leaving, or competition has raised a lot more money and they are discounting the hell out of it, or somebody has got acquired. So I lost all my hair in the last 32 years. Otherwise, I was also very young and smart and had a lot of hair because of being an entrepreneur, even in the best of the times. So, point number one, entrepreneurs are completely capable of handling this. The amount of hullabaloo, amount of chest beating that's happening is not really true. Point number one. So we have seen this multiple times. We have handled it. Two, if you look at last year, huge amount of funding, unicorns, high valuations, all of it happened last year. So obviously there will be correction. Both public and private markets go up and they will come down. It's never up and up. So this is what we are seeing now. Very normal, very natural to be expected. So therefore, again, to say that, oh my God, once in a century fall is happening, this is happening, that's happening, all that is unnecessary. Point number three, yes, it is, people have been laid off. I mean, by various reports, 5,000, 6,000, 7,000, 10,000 people have been laid off. I mean, we are talking about lakhs and lakhs of jobs being created in the last year, hiring done in the last year, and Sanjeev can share actual data. But somebody said 28 lakhs have been employed just by the unicorn. If you take total,
Ganesh,
we are talking about
Sanjeev
50
shared fabulous actual data,
50,
by the way.
50 lakh people. No, whatever is the number, we are talking about extremely 2%, 3% of layoffs. When you have huge hiring last year, there will be layoff now. So my request is, one, Look at it in perspective. Coming back to the specific thing, yes, if you are a company which was planning to raise your next round in the next 6 months, 8 months, you are in trouble. And already panelists have talked about how to handle some of the things that's there. You need to do it. If you have already raised money and tank up, your tank is full, it's great. The petrol pumps are not shutting down. It's exactly like you have filled your tank yesterday. Next 2 days, there is going to be a bund. There is no petrol available. You are in trouble. But if you don't have to travel, then it's fine. What is the equivalent of that? If you're not burning money, if your burn is not high, if your runway is next uh, 18 to 24 months, you're in a happy situation. Either because your burn is low or because you have already raised capital or a combination of both. Otherwise, you are in trouble. You have to stretch the runway, multiple ways to stretch the runway, or go back to existing investors, people like Anand Lunia, people like VT Bharadwaj, people like Sanjeev Bikhchandani, and at whatever bridge, whatever discount, whatever way, ask them to give you more runway so that you are able to extend. These are the people whom you go back to and do that stuff. That's what it is.
They
But
can
I
also
think too
come
much.
to Ganesh, no?
Sorry.
I said they can also come to you for bridge rounds.
Yeah, yeah. They
Exactly.
can also.
Well caught, Chandra. Well caught. He's very smart. Ganesh will know.
He's leaving the
No,
others to
I'm
pick
an
up.
entrepreneur. I have to go back to these people only. Okay, right? So,
I've heard that.
but seriously, we need to
You think
extend that runway because it's not going to close now. Nobody wants to catch a falling knife. People don't want to value. External investments will take time. Whatever we're taking 3 months will take 9 months. Will be lower valuation. Will be half the fundraise. All
Ganesh?
of that is reality.
Okay, Ganesh, hold your thoughts there. We also have VT Bharadwaj. We finally connected with him. VT, we've heard about
Yes,
what's
lot of
happening in Delhi, NCR, Chennai, and Bangalore. Give us a sense of what's happening in Mumbai. What are the
Uh,
conversations like these days in the startup ecosystem there?
I'm taking the call from Bangalore, but I will give you a temperature check from Mumbai. Um, look, I think there are two parts to this story, Chandra. I think one is, as Ganesh was right, which is saying in terms of the absolute amount of capital that came into India.
Can't hear him.
Yeah, I think we
Yeah,
lost
I think
him
the screen
in
is
the cab.
broken.
Yeah, we
What
lost.
would have come
I think
in a normal
Sanjeev?
year between 2016
Yeah.
to 19. And therefore, when you get 35 billion in 1 year, even 10 billion in another year will feel like, oh, okay, should I restart?
Yeah, you were saying that, I mean, we got more than,
Yeah,
the
basically, he was
capital.
agreeing with what I said.
Yeah.
Yeah.
Okay. VT,
Yeah.
please finish.
So look, when 35 falls to whether it's 10 or 12, it will feel like a lot has gone away. And therefore I can see why from your perspective it's an interesting, it is absolutely a fair narrative, and it is an important story, right?
Thank you for that.
Um,
Yeah.
but
next time,
but
next time she'll call you. She'll not call me. Yeah.
yeah, I think and these things take time. So I do think that it's and obviously, and like most of these slowdowns, they've started in the US. And as Ganesh was saying, therefore you should expect delays. You should expect that the ease with which capital came is different. The absolute amount of capital that is coming, that may come in this year, will be lower than last year. And therefore you have to be prepared. I think the seasoned entrepreneurs will recognize this. If they have capital, they will find a way to extend it and make sure that they raise money later. If they don't have capital, they'll make sure that they get it on whatever terms they can get. I think it is important for the newer entrepreneurs who may not have seen something like this over the last, and look, and it's been a 10-year long cycle. So the entrepreneurs who have not seen this must take counsel from folks like Anand, from Ganesh, from Sanjeev, to say, hey, look, don't be emotionally attached to a number. What is important is to make sure that the goddamn business works and the business moves ahead. And you will raise capital in good times, like last time. You'll raise capital in bad times, but it's important to keep the engine fueled. So don't get emotionally attached to things like valuation, downsize, etc. Focus on making sure that there is capital in the company, and if it is not there, make sure you get it on the best possible terms that you can and move forward. I think some of the entrepreneurs who may not have seen this will be a chance for them to get seasoned.
Right. I think some of that has already started happening. I mean, versus the capital that companies wanted to raise, they've started accepting lower amounts. A lot of the unicorn rounds have actually turned out to be sunicorn rounds and so on. But Sanjeev, there is also this question. Why do all these marquee VC firms, start sending memos only after the times, turn bad? Why don't they send it during the good times? Why don't they send it, when companies are raising money at great valuations, spending crazy sums to hire talent? I mean, it, they all seem to do it, when startups are already in a tough spot. Why does that happen?
No, look, let's be fair to them. I think a lot of this stuff would have been verbally communicated some time back. It may have come out as a formal document right now. Second, a lot of this has been triggered by what the Fed has done. And the Ukraine war was unexpected, and the Shanghai lockdown unexpected. So, two out of three things unexpected. The first thing, which is a Fed, which is a Fed action that has been talked about for 6 months, and people have been tracking this for 6 months now. It's just that it came to India a little late. It happened in the US earlier. When you look at public market stock correction. Now, having said that, look, we have been saying for ever since we invest now 15 years, we've been telling our startups guys, make sure that you are running a sound business, because the customer's money is better than the investor's money. And we've always said that. Of course, when there's abundance of capital, some of the advice is not heeded, and that's life here. And these things happen. But right now, if you can get to good unit economics, you will be all right.
Right. But compared to previous cycles, how is this cycle different, Sanjeev? Because capital absorption.
It's too early to say. It'll evolve. The Fed is raising interest rates in steps. The Ukraine war could get resolved. The Shanghai lockdown is now being resolved, right? I think the announcement a couple of days back. So let's see how it evolves. If the base effect causes inflation to taper, in the US in a couple of quarters, who knows? The Fed may go a little easy. We don't know yet. So I think right now, it's looking tough and difficult, but let's see what happens in 2-3 quarters.
Right. Ashwini, give us the founder's perspective on this. How do you kind of read into all these memos that come back to back, at a time when founders are already reeling under so much of uncertainty and funding crunch?
Listen,
And
Chandra, one second.
layoffs?
All those memos are good advice. They're not bad advice. They're all good
No,
advice.
they're very good memos. I'm just saying, why does
Chandra,
it
I
come?
think,
It just
yeah,
seems
it's
a
come
little
a little
belated
late.
to me.
I think a large portion of it is just, it's very interesting as a founder when you're in the middle of actually running the business. One of the worst things you can do is to respond in a delayed manner to something that's changed in the market. That's one of the worst things that you can do, I think. And to be very honest with you, what's happening right now in some ways is very reminiscent of what happened in 2020 during the March COVID period, right? I'm actually seeing a lot of patterns from March, April 2020 to now. Certain things accelerate wonderfully and certain things die, right? There seems to be a very binary response to like who survives, who dies, right? And I'll give you an example here in the context of retail. As a market, retailers who weren't able to like adjust, and we're talking about very big names like Macy's and so many other companies in the US, right? That couldn't really adjust, pivot, like find a way to like make the most, just sitting on like a lot of real estate that's not necessarily being used meaningfully. Couldn't necessarily come to the other side, right? A lot of others who were very quick to respond, go online, create digital strategies and kind of really, make the most of online shopping, ended up like surviving and coming out of it beautifully to a point where so much of the online story, ended up thriving, right? So I'm seeing something very similar happen right now. It's less about panicking or responding to every memo that comes out. And I'm telling you, I'm pretty much in every founder group of any kind. There's a Bangalore founder group, there's a Chennai founder group, there's a SaaS founder group, there's a female founder group. I can't tell you how many, right? And everybody is having pretty much the same conversations. And I honestly, I'm with this sentiment that I don't think there's panic. And one of the things that all of us keep talking about, right, is things are never as bad or as amazing
Good
as anybody
as you
makes
say.
it out
Yeah.
to be, right? Like
Yeah.
it's never the case, right? The unicorn noise, oh my God, for the rest of us that were obviously not privy to that party was so incredibly, I think, it was so noisy last year, right? For
Yeah.
and even those of us in Chennai, even the unicorn founders in Chennai, I can tell you, like when we get together, we laugh a lot, right? At all the same kind of hullabaloo that's happening right now from a panic mode. It was true last year on the other end of the spectrum, right? And it was not necessarily as true, right? Sure, like people were able to raise a lot of money, and a lot of people that were there, like they just pointed out, still don't have a business model, right? So I guess what I'm trying to point out is, yes, there are lots of memos. These memos are, like Sanjeev mentioned, a lot of it makes you sit up and think a little bit. And I think one of the things that I want to point out is also, it is important to acknowledge that this ecosystem is not as mature as the US ecosystem. Let's just, especially startup founders, we're all, somewhere born and started to grow somewhere in the last 10 years, and the majority of them in the last 3 to 4 years. Majority of the investments and companies out there are like probably 3 to 4 years old. So people haven't seen this stuff. People don't know. And so in a way, whether it's a board meeting, whether it's conversations with your investors on WhatsApp, whether it's a memo, there's a lot of, oh, I see, here's what other people are doing, right? People are seeking out to understand, how should I respond, right? And in a way, I'd argue not responding at all is certain death, right? So I would rather, so information at this point from any corner, especially of people who've been there, done that, seen this before, should not be ignored as like noise, right? And all of us founders are actively discussing this stuff and going, what are you doing? And I can tell you, one of the biggest things that everybody is doing, and I know, last year I was very vocal about this, is these 30, 50, 60, 90% hikes are over. It's over. I know how March was, right? And March performance reviews, and we, all of us as founders, when we're talking to each other, I remember how March performance reviews of last year was, and I know what happened this year. Okay. And we're all talking to each other, and there's a sudden influx of people that are, kind of moving. And this attrition is not fueled by the same things that was attrition for the 2 years before, right? People were moving because they were finding someone else. They could shop an offer letter around and get like, 50% more and kind of play off of offer letters. That's not what's happening right now. People are leaving because they were given 5 and 10% hike, or 20% hike, and they were expecting 80% hike, and they're not able to, and they're like, I can't deal with this, right? So there's a lot of change happening. And I think, any information that's coming, whether it's from investors or from peers, there's a lot of conversations around, hey, what does this mean? How should we react? What are the right things to do? And, so I actually think these conversations have been very helpful for all of us.
That's an interesting point, Ashwini, because the trend that we picked up is, while there is stress on, say, the sales function or the marketing function, product and tech roles are still very hot, and they are still getting a lot of pay. So I don't know if that's already changed, or if that will have a lag effect, something that will happen perhaps 6 months down the line. There is
No,
also
there
a
is.
theory of, yeah.
No, that's definitely still hotter than anything else you're seeing. But that said, I can also tell you that there's a massive influx of your US companies, really large corporations, hiring like crazy. I can tell you right here in Chennai, like we just heard Amazon is doing like starter salary 40 lakhs plus RSUs of crazy. So there's a sudden, very new influx of, your old world classic corporate companies that I know that Bangalore has lived through this already. But we're starting to see this happen everywhere, right? So that's happening as well.
Yeah,
Anand, you wanted to weigh in?
tech hiring is a different dynamic. Yeah, tech hiring is a different dynamic, particularly tech roles, very different dynamic where COVID made the world flat, and we are seeing a lot of people being directly hired by global companies. So the big change that has happened is that Indian startups are not necessarily competing only with other Indian startups, right? Where your layoffs and sentiment can have a role. But if people are competing with dollar salaries, then it's a completely different ball game. And that's the dynamic change that has happened.
True.
So I think layoff is not even the headline here. It is because the headline is that layoffs may have happened in a few companies, but there is still a dearth of like this is what Sanjeev is saying. Naukri can't happen, right? I mean, Naukri starved of people is like a big headline, frankly.
No, so listen, it's like this. We are taking it quarter on quarter because the environment is dynamic, right? But right now, it looks like this will continue.
Yeah, of course.
The hiring spree will continue, you're saying?
In specific areas. And understand one thing. Yeah. See, but the tech guy is not just being hired by startups and not just being hired by global startups, Indian startups. He's hired by all sorts of companies. Big companies, small companies, multinationals, non-tech companies.
Yeah,
Yeah.
offshore placement where people just work from here remotely for a US startup, right? I mean, that's a lot of.
Even your non-tech companies are hiring tech guys. Yeah,
Yeah.
Yeah, they are. Captives have really boomed in India that
it's
way
not
in the
just
last
captives.
year.
I'm talking about your old economy, brick and mortar industries are not tech industries. They are hiring tech guys. The demand for tech people is coming
Okay.
from everywhere.
Hey,
Okay.
Chandra, I want to make one point, right, about
Sure. Sure.
not
Anand.
you, but in media in general, right? I think as a society, we overhype this word unicorn. Frankly, in 18, 19, 20 early days, when somebody became a unicorn, media would question, okay, oh, this is an overvalued round. Why is this round happened? Is it a good investment or not? And to be honest, even employees, for
We
example,
rely on the wisdom of investors, market investors who make these companies
no.
unicorns, who
That's
have
not that's not your
wisdom.
job. Your job is to question the investment of marquee investors. That's your job, right? I mean, Chandra, come on, not you. And that stopped. That's what I'm saying. We normalized employees, for example. And I asked somebody saying, "Boss, I joined this company because they were doing so good. They were raising money every 6 months." I said, "Dude, look at it. I mean, the companies like InfoEdge, they haven't raised a dime for last 25 years. Those are the companies and yet growing. That's where you want to join if you want to build a career. If you join a company choosing because it's raising money every 6 months,
We've lost him.
We have
Yeah,
lost
we've
him.
lost him.
No, but
I
I
think we
just
have.
I just point out something there. You see, in boom times, we are this headhunting ground. Where people come and headhunt us for talent. VC funded startups, other companies. In corrections, we become the safe haven, and so suddenly we might become a safe haven. We don't know. We're still waiting and watching.
Right. VT and Ganesh, I want to bring you guys in. How do you think this cycle is different from the previous one?
I think
See,
Anand is back.
Anand is back.
Yeah.
I
Anand, do you want to
I
complete your
really
thought?
don't. Go ahead, Vic.
See, I think Chandra, honestly, in terms of cycle, is the cycle different? We should leave it to the economists. It is very hard to know. I think what at least in the conversations that we have, both with other investors in the ecosystem and founders, is saying, how do you maneuver? How do you be prepared? And it's a bit echo of what Ashwini said, which is saying, look, circumstances have changed, and like any sensible person, we should adapt. So the focus is much more on adapting in terms of, is there any change in strategy? Is there any change in cost structure? Is there any change to discover something new on the business side? I think that is what the focus is on. See, because what we tell people is genuinely nobody knows. Somebody says they know this is going to last for 2 years, 4 years, 6 years. We don't know. Like I keep telling people, we have all heard this word quantitative tightening for the first time in the last 6 months, right? And this is honestly the first time Fed is going to do it ever in its economic history. So God alone knows. So don't try to predict. Let's not be the economists in the room. It's much more important to say, focus on unit economics, focus on what you can do, and yeah, and just that is what we should try to do. Let's not try to predict how long and duration and depth, because genuinely, these are big problems which we are not equipped to answer.
So
Ganesh?
Chandra, I
let me
think
ask you a question.
the
Sorry.
Sorry,
actual.
Sanjeev wanted to.
No. Let
Yeah.
Ganesh go. Let Ganesh speak here.
Oh,
I'm
okay.
after him.
Sorry. No, I again, having seen this over the last 30 years, whether it was dot-com bust or September 11 or Lehman Brothers going kaput and all of that stuff, I think the reasons for each of the cycles are different. But other than that, the implications to extend the runway, to tighten the belt, to focus on unit economics, and when you are making pitch to people like Bharadwaj, Anand Lunia, talk more about path to profitability. Don't talk about how will you conquer the world and all that stuff. They like to hear all these good things that the sentiments are like this. Other than that, there is actually no difference. Obviously, one of the things is because last year the scale was so high. Right now, it looks like a bigger calamity because the sheer, you see the startup ecosystem, right from the number of startups to amount of funding to valuations, all that was much higher than all the last 30 years cycles I talked about. Because sheer, numbers have increased. When the numbers have increased, oh my God, 5,800 jobs, 6,500 jobs
that's nothing.
looks to
That's
be
one week
large.
of absorption.
No, okay, right. There looks to be a very large number now because last year we hired lakhs and lakhs of jobs. 30 years back, we did not hire lakhs and lakhs, therefore, it was not in those numbers. Other than that, there is absolutely no difference. The steps are same. The reasons are different, whether it is Fed increase, the rate rise, or supply chain disruption, or Ukraine-Russia war. At that time, it was dot-com bust, September 11, stop this, or COVID. We have had 4 cycles I have mentioned. So therefore, I don't think I don't think it's different. Yes, because the high was so high, any drop there, like VT mentioned, looks to be substantial. Otherwise, I think we have to go back to the same basics that we have been there. You can actually take the Sequoia memo from last decade and that RIP memo that Mike Marriott sent,
RIP.
and you can do the and you can run the same thing. It's basically the same thing that goes. All these memos are good. They are very nice. Okay, right? A good presentation, well thought out presentation. You can take that and do that. But the steps, in my opinion, are exactly identical. One thing that I want to add is there is, and I've been there as founder running it. When you are deeply emotionally involved in the startup, you are too close to it. You are in a form of denial. I have been in a form of denial in the past. If I were to do it again and go back, some of the harsh steps I took, I would have taken sooner than later. I should have done. But you are obviously an optimist, otherwise, you will not be an entrepreneur. You think things will turn around faster. You hate to cut sooner than later. It's like doing a surgery on yourself, right? You don't want to do it. You think that this is not going to be a tumor. It's going to solve on its own. You don't want to see the doctor. The same thing happens. So from that perspective, having somebody who is slightly outside, maybe an investor, maybe a board member, maybe a mentor, maybe your peer founders, to show you the mirror and show you the reality and say, guys, I know it is hard. Go for that health checkup now. Don't wait for the tumor to grow before you go for it. Do that surgery now. Do that cut now. I think would be very useful. It's easier for me to say when I'm outside. When I have been on the inside, it was a state of denial. Okay, right. So that way, all this showing the mirror and inputs, including some of the hullabaloo and hysteria that the media creates, or some of the media creates, like
Oh,
which
what
charity
problem you
will
have with media, Ganesh? Seriously.
HDR is also good because this
We
5,800.
are just reporting things as they are. It's a reflection of what's happening. But
Okay,
Sanjeev, please
okay,
come in.
okay.
You wanted to say
No,
something.
I was just agreeing with what I said earlier. That look, you can't predict. You just can't predict. Now, tell me something. In 2020 April, so Naukri billing was minus 44% YOY, right? In the first lockdown, right? Now, who would have predicted, hey, $5 trillion will be printed, then it'll come back, there'll be enough liquidity, and this boom will happen, while, the underlying wasn't doing that well, apparently. So you don't really know, you can't predict, but I sort of borrow from Tolstoy, all booms are the same, but every bust is different in its own special way. So I disagree a bit with Ganesh that they're all the same. They're not all the same. They're all different, and you've got to react differently to some extent.
But you're saying it's still evolving. We still have to wait to see how it will.
Yeah. We still evolve. See, the Fed has said
still
we'll
need
do.
to-
The Fed has said we'll do halal, not Fedka, right? Which basically is the boss. We'll raise it over 7 times, and we'll do the balance sheet contraction every month, every quarter, in phases. Now, what it tells me is that they're tracking and monitoring the situation. They're trying to make it a not very hard landing, right? And should the environment change, they're possibly halfway through the plans could also change. But they're most bothered about inflation in the US, right? If Shanghai lockdown sort of goes away, and there's some settlement in Ukraine, I think global supply chains will ease up, right? That will cause perhaps a decline in oil prices. That will cause some amount of
Also bring down the transport costs. Yeah.
inflation coming off because supply chains are restored, and that could perhaps alter some of the Fed action a bit. We don't know. I'm speculating. I have no information, but all I'm saying is predictability is poor.
So,
And
Sanjeev,
हर एक situation अलग होता है. It's different, and just we got to look at it differently.
Sanjeev, I agree with you that established companies and companies with some business may not really face revenue restriction or revenue constriction like what we saw in COVID in the April June quarter. But I feel that given that we don't know, I think it's important that I mean, it's June is already late. I mean, anyway, our portfolio started tightening right in February. You have to sort of today say, okay, I don't know when the cycle will turn, so maybe I just want to conserve my cash, and it's okay. It's okay to not grow or
Yeah, it's
not to
perfectly
hold
fine.
on.
It's perfectly
Yeah,
fine because the goal right now is surviving.
perfect, absolutely.
Yeah, just be alive, like that famous Nityananda
Yeah,
meme
and I'd say
going on.
if we have cash, I'd probably conserve my cash when the clouds are up off and clearer sky, and then I spend my money, even
Yeah,
if
I
I
mean,
have
live to fight another day.
absolutely.
Ashwini, do you think founders are in a state of denial or have they kind of smelt the coffee?
No, no, I don't. I definitely don't think. Just looking at the conversations, and I can only speak to it primarily from a B2B perspective. Uh, I would say everybody's talking about it, right? And everybody is, like I said, the performance raises. I think the salaries that are happening, that itself is a sign of like things mellowing down, honestly, right? And people realizing that they don't. The other conversation, which is a little bit of a funny thing, right? Companies that have been flush with a lot of money in the last year, 2 years, right? If you think about it, again, talent has been so, from an age perspective as well, talent has been fairly like on the lower end, right? Like early 20s. That's where the majority of the talent for India is. You don't necessarily find experienced people in any of the fields for the most part because, again, it's a fairly young ecosystem from that perspective, right? And one of the things that we constantly joke about, you raised a lot of money, now you've gone and hired people, now you got 5 people, now those 5 people need a manager, and then that manager now needs a VP or a director, and then now they need a CXO, and then all of a sudden, you have a 100% organization within one department or one team, and you're now sitting up and going, okay, I raised money, I hired all these people, what job do they have to do, right?
Yeah.
I'm also seeing these conversations and jokes kind of happening in the circles, right? Because that's how this works. And so I think everybody's having these conversations. I don't think anyone is in denial. At least people who are, that I'm seeing and watching, having these conversations. That said, I have a little bit of a slightly different kind of an opinion in terms of how I actually view this time or this period, right? And I'll borrow a completely random quote said in a very different context by Michelle Obama in this context. When they go low, you go high, right? And she said that in a completely different context. But I'm going to grab that and run, the exact opposite direction with that quote. I actually think that India doesn't have enough risk, like has not had the risk capital has not gone far enough in India. I truly believe that, right? That we have 25 profitable unicorns. I think you guys published that, if I remember right, of
Yeah, we
100
did.
unicorns,
Yeah.
25 of them are profitable or whatever. 25% of your unicorns are profitable. Like, that's pretty ridiculous for an ecosystem as young as us. Completely different. Let me just give you a whole other view on this, right? That's pretty ridiculous. That's not how not to say that we have to follow the US playbook. That's not my point at all. But I actually think that risk capital has not gone far enough, right? If you look at even the SaaS ecosystem, how many SaaS companies are there that are there on the growth stage today? Like,
Hmm.
you
Hmm.
can count, like, between all of us, if all of us put our fingers up, I'm sure like that's too much. Then the number of growth startups that are there in the B2B space, I don't think. And so there, I actually look at it as, I think it's a great time for India to actually get competitive. I think it's a great time, for whether it's being operationally efficient or continuing to invest more in companies that have gotten their, you know
Right.
economics right, and to double down and give an order of magnitude competitive advantage over, especially, as I mean, and I speak completely from the perspective of a company that's building here and selling in the US or selling globally, right? There is a lot of, I think, competitive edge to be gained over the next 12 to 24 months if we do this right.
Right. I know Sanjeev has a hard stop, so I'm just going to get closing comments from him before we continue the discussion.
Sure.
Sanjeev, what's your sense?
My sense is if you need big money tomorrow, right, and you've got negative unit economics and your current investors aren't backing you to that extent, you're probably in trouble. But if you've got 2 years of money and you can make money in the last 2 years, I think, there's a good chance you'll come through it. Because boss, an entrepreneur, he's a survivor, he or she, all right? They're survivors. Well, they will find a way to survive, okay? But they need some time.
Hopefully, many entrepreneurs get that time.
And not all companies are in trouble, yeah? So many companies are not in trouble. So it's like, I'm saying it's a mixed bag.
No, just Chandra, I want to add to what Sanjeev mentioned here. See, as long as you have that runway, either because you have raised money or your existing investors, you can get bridge, or you are able to cut your costs, or a combination of all the three to be able to do that, then it is a great time, because you will find that weak competitors will shut shop. We have seen that happen during COVID with some of the businesses which were in a competitive environment. There were 5 funded companies. 4 of the funded companies could not get support, and they ended up. And now this company is the only company that's there in the market. And therefore, the weak will fall away. It's a great, if you are able to survive, you will be the last man standing or one of the few men standing, and you will come out much, much stronger. So there are benefits from this. Other than the benefits, of course, we know that some of the hiring will be possible, the cost will be lower, expectations will be lower, all that is there. So if you survive, not only you will be alive, but you will be in a better position than hyper competitive, highly funded environment that was there earlier. I'm not saying I wish this had happened, but there are good silver linings to this if you are able to keep your head above water.
Right. Ashwini spoke about how barely a quarter of India's unicorns are profitable. Anand, do you think the current phase will sort of increase scrutiny on the kind of companies that became unicorns in the first place? I know you have a term for this, zombie unicorn, which can be called zombie-cons. But what is your sense? Is that going to be something that will become all the more apparent in the current environment?
I think we'll have to distinguish between unicorns and zombie unicorns, right? I think that's important. But importantly, I think see, there will be some reallocation of resources within the ecosystem, right? I mean, many
And
companies.
for the benefit of our viewers, maybe you should tell us what are zombie unicorns and why do you call them
No, a
that?
zombie unicorn, which is like, probably has some money to survive, right? Doesn't want to shut down and doesn't also want to get into a real business. So these unicorns sort of become default alive at a very different scale or in a different niche. And they still are unicorns, right? I mean, the status, probably in the investors book, probably VT will tell us more about how it's treated, but it remains a unicorn. And I think that's not good, because I think as a country, as a system, we want better allocation of resources, right? And I think what happened in the boom time is that we were hiring rocket scientists not to create defense systems, but actually to optimize arrows, right? I mean, like literal arrow buttons for some discount app. I think that kind of resource wastage, I think, has to be reallocated. And I think, what I feel is that in US, companies are shutting down, will shut down many more. India, we rarely see shutdowns. We sort of see companies going sideways and going into a sleeping mode.
Okay. Okay, Sanjeev, I think has to leave. Sanjeev, thank you very much for being
Thank
part
you
of the
so much,
show.
Chandra. Thanks, everyone. Nice talking to you guys. Yeah,
Absolutely.
bye.
Thanks,
Thank you,
Sanjeev.
sir.
I'm
Always
going
a
to
pleasure.
request the rest of you to stay back for the remaining 10, 12 minutes that we have. VT, I want you to come in on sector specific pain points that we are seeing. EdTech has clearly been impacted. People are also talking about D2C, Thrasio, which was very hot last year, the so-called roll-up e-commerce space. And you are someone who's invested in consumer internet startups for a very long time, consumer-facing startups, the whole FMCG space. What do you make of it? Roll-up e-commerce, will it still continue to be a fad?
Chandra, I'll give you
See,
a headline. If
yeah.
VT invests in a Thrasio company, that will be a headline.
So let me start. See, I think this is important. I think and maybe this is the point which is around the memo that has gone around, right? I think there is nuance in the memo depending upon which company is in what stage, right? And therefore, as I look at the consumer brand ecosystem that have been digital first and are now using the resources that they have raised to go omni-channel, I actually think they're going to be in a great spot because on the one hand, they have established product market fit. The smart ones, which started digital first, have quickly realized that if you want to build a nice, thriving, profitable business in India, you can't keep paying big dollars to big tech. You have to diversify, be it on advertising or on retail. And have all gone omni-channel in terms of both ability to sell the product as well as ability to advertise. And third, to Ganesh's point, they are well capitalized, and they're also going to be in a lucky position where the younger companies may not have as much capital as they had. So they're going to do a great job. I think the key in these things, Chandra, is consumer brands who found product market fit and who've raised capital are going to have a great time in the next 12, 18, 24 months. Now, if you didn't have product market fit, my honest answer, and Anand knows me very well, is I always believe you shouldn't raise too much capital. Because capital can't find you product market fit. You and the customer have to find product market fit. Capital cannot do that. So it's okay. And some of them, unfortunately, will have a lot of capital and they will not know what to do with it. Hopefully, they'll find better use of the capital. And those are the ones which are, may make it to the zombie list that Anand mentioned. And in terms of Rollup, look, we're not buyout investors, so I genuinely don't understand Rollup.
Yeah, I think
No, that
Chandra,
we need
what
to
happening
understand.
is,
Otherwise, you understand whatever you. That's assumption. I'm just joking. Okay, I have a lot of respect for you guys.
I think Chandra, you made a good point about Thrasio and other models. These are not proven models, by the way. What happened was when too much money was being printed, we were seeing a sort of a financialization of a tech company, right? I mean, all the gimmicks that usually happen in outside the tech world were brought into the tech world, right? I mean, roll-ups and increasing revenue, acquisition strategy, buyout vehicles. I mean, these are when founders, when they raise money, they are supposed to create a superior product, some intellectual property, find a product market fit, find a great distribution channel, create cash flow, and go to IPO. That's the standard path. I think probably somewhere we just shifted from what a unicorn is in terms of revenues and the great product and leadership and all that, and we shifted the definition to a financialized version of it. I mean, a company becomes a unicorn in the Series A or Series B, and we say it's a unicorn. I mean, I'm sure some of those will actually also go on to become unicorns, but we have to distinguish.
I agree. I mean, what Anand mentioned, I mean, the word used is a string of pearls strategy for a Thrasio kind of startup. So the idea is like this: you can do D2C small, but it will not scale. Now, if it's not going to scale, it can be a niche profitable business. Now, how do you package it in such a manner that you are able to get hundreds of millions of dollars and also get valuations of billions of dollars is by a string of pearls strategy. I don't believe in it. I don't like it. I don't agree with it, but I'm telling you the story, the theory
Yeah,
that it
you're
okay,
right.
right? So
I
you
think you want
basically roll up.
to know the retail space and retail tech quite well.
Yeah, so basically you end up aggregating it and you call it Thrasio model, Thrasio of this, Thrasio of that, and then create valuation. That's it.
Yeah, I mean,
Body.
hey, by the way, Chandra, this Thrasio
And
model
he
is
would
nothing,
actually win. Yeah.
not just restricted to brands, consumer brands. Okay, we've seen Thrasio for education, Thrasio for finance or fintech.
Yeah.
We've seen
Thrasio
Thrasio
for
practically in
food.
every business. Yeah. I mean,
I'm going to do
I,
a Thrasio
I
for
will,
VCs. I'll
by
get
the way,
VT. I'll get VT and India Quotient and all the Thrasio for VCs. I'll go.
hey, by the way, we are not very far from seeing a Thrasio for SaaS. Okay, so let's hold our breath.
Ashwini, Thrasio for SaaS.
She
Dear
likes it. I
God,
think.
no.
She
Dear
likes it.
God, no. No, I don't. Dear God, no. I feel like I said, right? I feel like SaaS is just we're barely getting started. That's my take on this whole situation, right? Like, I think everything is so young. Everyone's so young. The ecosystem's young. The money being put in is not nearly as much as it can be. The number of startups in growth stage is barely like of significance. There is just so much work to be done on the ground for this ecosystem to get mature that having these, like, I think any high rhetoric on anything is a bit of a pointless endeavor, right? Because we all just need to be in the ground, like just building and doing our thing and making sure we get to the growth stage so that we can all be like Sanjeev at some point. So I feel like, and that's pretty much what all of us talk about, right? Like, what does it look like? What does it mean? That's it. There's nothing else. Like, nobody cares about anything else. If you can grab a beer while you're doing that, fantastic. Broadly, that's it.
Anand, you
Chandra,
wanted to
yeah,
come?
I think I just want to make one point about to investors, particularly younger investors. I see all of us are similar vintage VT, Ganesh and myself. The point is that in a boom time, uh, younger investors have tended to they sort of tend to spend the reputation earned by their firms, right? The reputation is like, India sort of had less capital. We were struggling. All the good reputation was built in tough times, right? Younger fund managers have tried to spend that reputation. Whereas if you see what Ganesh was, he didn't start a company. I mean, like hardly any company in the last 2-3 years, I haven't heard from him. VT barely invested. Like they raised one of the massive funds of last year, but very few investments. So if you can't add to your reputation in a boom time, you don't want to spend it because generally reputations of investors are earned in very tough times, right? And you don't want to spend it away in a 2 or 3 year boom cycle. And that unfortunately happened in this last boom cycle.
Because
Thank
there
you,
were
Anand.
younger investors or younger VCs who did not have the benefit of hindsight.
Who didn't earn the reputation themselves, right? So somebody earned it and they spent.
Got it. VT, the other part that I wanted to ask you about, and this is something that all of you can be in, or is on the actual size of the Indian market that most of these companies go after. I mean, we spoke to Nitin of Zerodha recently, and he said that the actual size of fintech in India would be 10 to 15 crore, whereas money was raised as if it is 45 crore to 50 crore users. So is that also a problem? Have VCs kind of over invested in a market that does not have so much of depth? VT, maybe you can start.
No, I'm happy to go first on that. Look, I think, and I did go and see what Nitin had written, and obviously, it made sense in the financial services, wealth management context, right? I think it is very important to know which market you're serving, and the fact that, look, India per capita income is sitting at $2,000 is a known point, and there have been many McKinsey presentations I remember from 15 years ago, which used to talk about India A, India B, India C, India D, and all those ABCD remain. Yeah. I think the key is to make sure that if you're a smart founder, you will know which market you're serving. I'm sure if Rin and Tide are serving absolutely a billion, 800, 900 million household market, right, in terms of people whom they touch. And if you're a smart founder, you're making sure that you're finding the relevant right product to sell to that market. And if you feel for whatever reason that you're stuck in terms of your product price point, let's say if you're a consumer brand and you're selling a product at a price point which is relevant only for the first 20 million households, I think you quickly realize that, and then you invent and you go back and you do value engineering and say, how do I expand from 20 to 50 to 100 to 200, right? I think that's a job, and that is only founders can do with their imagination as they confront different points in that market.
Got it.
And smart founders do that. So I wouldn't overread into it. Now, yes, if you're not someone who's lived in India and who's not walking the streets, you may end up getting misled by the billion people number. But I don't think, I would not characterize that as a problem for everybody. I think if you've lived, as long as you're pounding the streets in India, you're aware of what India is. And you also know that to continuously expand market, you will expand your product range. And smart people do that all the time. We have a company in our portfolio called Paperboard. I think the first time when they launched, it was an armrest at 35. Today the hottest selling
Yeah,
product is a
today they
10
sell
rupee
at
swing.
10 rupees and
Is a
20 rupees.
10 rupee swing, and smart founders do that, and I think they will do that. Sugar, you should talk to Vinita. There's sugar pop, and we see that with everyone, and Ganesh has seen the story many times. I don't think you get stuck. You start with some place and then you keep expanding the pie.
Anand?
So I think the same thing, right? Of course, no amount of funding can change the GDP per capita. That won't change. But at the same
Yeah.
time, if we thought that did we think frankly 5 years ago, I never imagined that India will have so many broadband connections, right? And everybody will have a smartphone. I mean, today we practically say anybody. Chandra, we have farmers paying for services through UPI. Okay, and these are small and marginal farmers. So I haven't really seen, of course, like you said, you can't get carried away by the 1 billion number. At the same time, somebody says the market is small and GDP per capita is small. That doesn't mean that the total market is small. I mean, for a $1, $2 per month service, there is billions of dollars of revenue out there. It's a tougher problem, and not for everyone.
Right, we're winding down to the last 4 minutes. So I'm just going to get all your thoughts on when do you believe this so-called startup funding winter is going to end? Maybe Ashwini, you can go first.
I'm not holding my breath. I didn't hold my breath before. And I think, focus is for us at least, I can tell you the focus is about, is on getting profitable this year. And then kind of, you get to be in a very different position when you go back out, if you need to go back out to raise more money. So I am not holding my breath, and I honestly don't care. I think I only care from the perspective of my customers and the kind of people that we are reaching out to, because what's going on right now clearly impacts all of them, right? From a market perspective. So it's less about the funding itself and more about the market that I would say my focus is on.
VT, any predictions?
I think there is a lot of fog in the air. So my prediction is that it will take 6-9 months for the dust to settle down and for us to understand truly what is happening in the external environment. But one thing I'm absolutely certain about is one of the revolution India has seen is just the number of first generation founders with no background in building a business, stepping out with courage to start businesses. This is a phenomenal trend. I don't see that changing at all. It'll only be stronger over the next 12 months.
Yeah, I wonder where VT is traveling in Bangalore. He's been in the car, for the last 1 hour. So this is typical.
No, you would have
The
traveled.
answer to that is anywhere, no? The answer to that is anywhere, no? Anywhere
Probably
is
just
catching
Silkboard
Bangalore.
Junction. Just Seaport last 1 hour.
What started in Google Maps as a 15-minute ride to a cafe where I could do this conversation is just continued forever, Chandra. So which tells you at least traffic is back.
Yeah. In 2021, some startups would have become unicorns by the time you completed your ride. But Anand, when do you expect the funding winter to end?
I think we should not think of this as a funding winter. These are Kal Chakras. This is Kal Chakra. You have to live through that. It'll happen, good and bad times. Founders who produce something and sell something every day, they will not face any problem, winter or summer. As a fund, last 10 years, we've been doing 10 investments a year. Sometimes we do 8. Last year, we did fewer. So I think, you just maintain your cadence, stick to your job. And, if there is a good summer and, good weather you enjoy, and winter, you just hope for the better weather to come. I don't think we have to attach too much importance. I do think Indian economy will do very well. I am not expecting revenue downfall in Indian companies at all, right? In good companies. So I think that's a big positive. That could happen in other economies, by the way. India will not face negative revenue growth. Negative valuation is irrelevant. For a founder who wants to spend his lifetime in a company, all these up and down swings, you ask Sanjeev, how many, you ask Ganesh, man. Like the kind of cycles Ganesh has gone through, and I think irrelevant. I think he's doing it because he enjoys doing it. He doesn't care about summer or winter. That's how it should be.
Okay, I'm going to let Ganesh
Yeah,
have the last. Yeah, VT, sorry, you were saying, yeah.
Yeah, and you should ask Ganesh. He will not call a year where India gets 8 or 10 billion as a funding winter.
Yeah.
No, I think firstly, don't know whether it's 6 months, 8 months, 9 months, but like all the panelists said, it really is irrelevant. Obviously, it's very relevant if you have only 6 months runway because you are in the danger of shutdown, which should not happen. Then you should singularly be focused on how to extend your 6 months to at least 18 to 24 months. That is what will give you some relief. So that's one. Two, but more importantly, this is the time to focus and build your business because there is very little hype that is going around. It is real business. So this is a great opportunity to be able to build and focus on the core business. Obviously, subject to the caveat that you do have more than at least 12 months of runway. If you ask me, if you put me on a spot and ask me for a time frame, I think things will start improving in about 9 months' time. I don't think it's going to take beyond that. We have seen multiple cycles. People have raised money. They have to invest money. It will come up. valuations will be lower, ticket size will be lower. Those are there to stay. So I wouldn't call it winter. I would call it slightly chilly weather. Okay, right? So you need to wear a bit of sweater, maybe a wind cheater to be able to do it. But that really is it. You can't ignore it because you will catch a cold. But you don't have to go and start wearing woolens right away.
Okay. On that note, thank you all very much for joining us on Money Control Masterclass. Sanjeev Bikhchandani as well, who had to leave a while ago. Anand, VT, Ganesh, and Ashwini. Great having all of you on this show. Thank you very much for joining us.
Bye, guys.
Thank
Great
you
fun.
so much. Thank you. Thank you for inviting me.